Liquidity mapping is the easiest way to get rich trading in 2025, and it works so well it almost feels like cheating. Once you learn this, you'll never go back to complicated setups. I'm going to show you how I use liquidity mapping to identify high probability trades that average 2 to 3 R. And just so you know, this isn't just theory, this is how much money I have made this year using this exact approach. By the end of this video, you'll understand exactly where smart money parks their orders, how to map these zones, and how this single concept can replace every indicator you have on your chart. Right, so I'm going to talk you through what exactly liquidity mapping is. So it's basically using the higher time frame to identify where price is going to move to next. You have a sequence of highs and lows in the market, and it's first of all your job to identify where price is going to move to next in terms of this order flow. And the best way of doing that is by using these range boxes. To find these boxes, just head over to the taskbar on the left, open this up and go down to rectangle, and you can choose your rectangles by design. You can have a dashed line, a dotted line, a background, whichever suits you. And all you're going to do is drag from the very bottom of a 4-hour low, and you're going to map out the new 4-hour high. You can see here that it's printing higher highs and behind it higher lows. That's how we map liquidity on a bullish trend. Liquidity is resting below each low, and when we get a shift in market structure, it takes out those lows, and the confirmation that we've had a shift in trend is that we get second and third and fourth and so on new lows going forwards. So inside of this new trend, now that we've had a confirmation of a market structure shift to the downside with multiple 4-hour ranges bearish, I'm going to show you how I took advantage of trades in this area totaling over $10,000. So if you move over to a 15-minute time frame, and you can still see these range boxes. Each of these trades are in the New York session, and they're all following a time-based and liquidity-based entry model. Now this first range was more of an aggressive over the confirmation model on the second two. Why is this more aggressive? Because you can see it's still inside that final bullish 4-hour range. Why did I take this trade? And I'll share the screenshot right now. I took this trade on the expectation that price is failing to push higher, because you can see this all-time high to the left. Price had wicked and come right back into this range. So I'm expecting this low to go next, even if this was going to take liquidity and then continue to the upside. That was the objective of that moment. I wasn't expecting a bearish market, although that's what we had, and we have confirmation entries inside of there following that new trend. So that first entry model was an expectation of targeting this 4-hour low. As you can see, that's where my target was. And this is quite simply session-based liquidity. All liquidity that's resting above Asia and London highs. New York came back to take. We had this bearish retrace candle right inside of here, and entry was right after the 15-minute close inside New York session, so 10 a.m. Eastern time. We had a 60-point stop just covering above the previous New York highs, and then a take profit at that 4-hour range low for a 3-to-1. If I zoom back out to the 4-hour, you can then see after that trade had played out, we had one low below this external bullish range low. We wait for price to pull back, and as soon as it breaks that low a second time, like so, we then have a shift in market structure. So in terms of liquidity mapping, the liquidity we're expecting now is that price is going to keep creating these lower lows, and liquidity is going to be resting below each of these lows, and price is going to keep targeting these lows. So we're going to keep selling into these lows basically. We're no longer looking for buys. So the second trade is again based on timing, New York session. We had Asia session taken from London. We had pre-New York, and we had some news take out liquidity above London session, and a continuation during New York session. This was a bearish candle inside of New York. It was actually a 5-minute candle, but we'll keep on the 15-minute for now, with a 30-point stop and a 4-to-1 to the lows. Notice how I have mapped out liquidity below this 4-hour low, and that's exactly why I chose to take profit at this area. I'll show a screenshot of the trade running right now, and that's trade number 2 that's played out. Now the third trade further along is following the same exact model. You can see if I zoom out, these 4-hour ranges are still bearish, so we're still expecting price to push lower. This one I actually held slightly longer, but the 4-hour lows were right here. Timing again was on our side with New York session. What did we get inside of London? London drove higher and manipulated the Asia session and continued lower, leaving internal range liquidity resting here. Pre-New York session took that out, retrace candle right here, entry, 55-point stop. We could have got out with almost a 3-to-1 to the 4-hour lows, but I did actually hold slightly longer with almost a 4-to-1 profit on that trade. This is how liquidity mapping gives you a clear directional bias and helps you identify which direction price will head for the coming session. Make sure you're subscribed to the channel. I upload videos every single week for free, and the more time you invest in my channel, the more time I'll invest in giving out free content. If you're working towards becoming a profitable trader, but feel there's something missing, you can apply to work with me as long as there is a link to apply in the description below, and you can see results like my traders here who have been working with me for a matter of weeks and months, who are hitting goals every single day, passing funded challenges, and making money from trading that they never did before. I'll see you in the next video.